Hello all my viewers around the globe, this is Simaligas. For today's tutorial, I want to show you how you can trade futures on Bybit. So just stick with me until the very end. If you haven't subscribed to my channel, please subscribe and click on the bell icon so that you don't miss any video from Sima Crypto. With that said, let's dive into the video. This is how Bybit looks like when you enter it. And if you don't have a Bybit account, just go in my description account and you open a Bybit account with me. There is a link there. So you will earn even up to 30k when you open with me a Bybit account with a link. Specifically today we are going to use derivatives because this is where you're going to trade futures from. So when you come here on derivatives, you'll find a lot of things. There is USDT perpetuals, there is USDC perpetuals, there is USDC options, inverse proportions. All these ones are futures trading. For today's purpose of education, we are going to use USDT perpetuals. You can maybe click on USDT perpetuals, or you can come here and come here, of course, and you see all the coins that you want to use and select from here. So this is how the platform of futures looks like. These are the coins that you can select. If at all you don't want to use BTC USDT perpetuals, you can select from these coins. Again, when you want to use other coins, you can come here and select using, maybe I want to use Sol, maybe Sol. So you can see these are the Sol, USDT and Sol Pep. So you can select from these ones. So this is the price of BTC. This is 24 change. This is 24 hours high. This is 24 hour low, and this is 24 hours turnover USDT. This is funding rate or countdown. This funding rate, you're always given some percentage whenever you trade on Bybit under futures. These are the tools that you can use, of course, if you want to trade futures and you make your technical analysis. These are the time intervals that you can use, and every time intervals, that means that every candlestick here represents according to the time intervals that you have selected. Let me say that I have selected 1 day. It means that every candlestick here represents 1 day. And the same applies if at all you select any time interval, it will be representing the same time interval that you have selected. So every candlestick here represents 4 hours. So when you come here, there is indicators. When you're making your analysis on trading, then you can select any indicator that you want to use. So here there is Bollinger Bands, and I have also the volume. If at all I want to remove them from here, I can come here and remove them, as you can see. So but if I want to add them more, then I can come here and put, let me say, volume, and when you say volume, of course it will be there. Again, if at all I want to put the BB Bollinger Bands, of course it will be like this. So that's how you can set your own indicators dependingly. So here there is a standard. With the standard, everything is standard. You don't select your own indicators and everything, but here on TradingView you set everything for yourself. So that is the difference between standard and trading volume. And again, the difference between spot and trading volume. With spot, you buy a coin expecting it to go up, then automatically you make profit as you have predicted. But with futures, this one you can make loss. Once you predict that the price of BTC is going up, that means you're going to open long, and the price goes down, that means that you will be liquidated automatically from the market. If at all you predict that the price of BTC will go down like this, and you select open short and the price goes up, that means you're going to be liquidated. Liquidated means that if the price reaches on the mark price where an exchange selected, that means you'll be liquidated. So it means that if at all you say that the price will go up and the price goes down, then an exchange set a mark price that if at all it goes up to this specific price, automatically it will take everything that you have in the market. So that is the difference between spot trading and future trading. And again, the difference between open long and open short. With open short, you predict that the price will go down, and open long, you predict that the price will go up. So when you select that open short, that means it will go downwards. With open long, it will go upwards. So that is the difference always. So this is the MacBook. Of course, you can see these are the people who are selling and these ones are the ones who are buying. You should mark all these ones. So with here, this is how you can enlarge the market. Of course, if you want to see the whole board of trading, and if you want to shorten it, of course you come back here and shorten it as it is supposed to be. So with here, you can take a screenshot with here and maybe put it on Twitter or anywhere that you want to put it. So this is how you can take a screenshot. So here you're going to find standard and strategy. With strategy, you're going to use grid bot. Here you are setting everything using a bot, but for today's purpose of education, we are going to use standard, and we make everything. Suppose that you have made your own analysis, and of course this is not a financial advice. First make your own research before you enter in any trade. When you come here, you will come on margin mode. Margin mode, there is cross and isolated. With cross, let me say that on my account right now I have 87 US dollar. So once you make a trade using cross and it reaches on the liquidated price, everything in that account will be liquidated automatically, and of course even the liquidated price will be higher than isolated trade. But when it comes to isolated, it will take only the amount that you have selected in that trade. Let me say that out of 87, I'm going to use $13. That means that if at all it reaches on the liquidated price, it will only take $13, not beyond this one. So that is the difference. With cross, it takes everything in the account, and with isolated, it only isolates and takes only the amount that you have selected in the price. So with leverage, you select the leverage that you want to set. What is leverage? Leverage, it multiplies. Let me say that might be the percentage of BTC or any other coin, it has moved up to 1%. So it means, and you have selected the leverage is 14.5. That means it will multiply 1% times 14.5. That means if someone makes in spot trading 1%, in future trading I will have made 14.5, depending on the leverage that I have made. But of course this one is very risky, and first make your own research before you enter in any trade. Of course this one is for experienced traders. So when you here and it makes like 2%, that means it will multiply and you find yourself with 29 point something percent out of 2%. So that's how leverage works, and you set according to short or long, and you will be ready to go. So that's how you can set your margin mode and the leverage. So under here, if at all you want to select and see before even you enter a trade, you can select and see the liquidated price. You can come on the calculator. This is how you can calculate. You see the profit that you're going to make. You put the leverage that you have selected and the quantity that you have put in the trade, and the entry price. You put the closing price. So here they will show you the profit that you will make, the total loss or the percentage, and the return on the investment. The same applies to target price, liquidated price, and entry price. So if you want one of these ones, you can come here and put. If at all you want long or short, of course you can do the same. There is limit and market. With market, the difference between limit and market, you buy at that specific price the trade is. Let me say I want to make this trade. I will just put the quality that, let me say I want to use all of the amount that I have in the trade, and once you're there, it means buy long with take profit and stop loss. So let me say I want to buy long, and I expect my price right now I'm on 24,600 plus, and I expect the price to go up, and I say that if at all it reaches on 28,000, I should take profit, of course. And I say that I have bought on this price, but if at all it reaches on 23 500, I should take the loss and remove from that price automatically. So once I say open long, automatically it will buy itself from this specific price. But again, if I want to buy or open short expecting the price to go down, so that means I will say that the market will go down up to 20k. That's when I should take profit. So if at all the take profit, remember now it is going down, so it means and I'm going to buy from this specific price. So I will say that if at all it reaches on 26, of course I should quit this trade and take this loss as it is. I will short this one and say open short. That's how you can set open short and open long. So this is market, but with the limit, now I set everything for myself. First of all, I make my own order price or opening price. I can say that the price right now is on 24, but right now I need that if at all the price goes up to 23, let me say if at all the price I want to enter when it reaches on 23,000, and I put the amount that I want to enter with. So here I take the profit, of course the same that I have said, 28. I should take profit, and the stop loss I should say that might be 5% depending, or I can set depending on how it is. So once I can set for myself that if at all the price goes down, remember now I'm longing, so if at all it goes up to 22, maybe I can put 100. If I say 100, that means this is where I'm going to take the profit. Again, if I want to short, the same applies, that how I set the short. So this is the difference between limit and open. With the limit you set your own price, but with the market you enter at that specific price. But market incurs some fees, of course a higher fees than limit in entering a trade. So with conditional, I'll make a video on how you can use conditional and make profit of that. So if you want to close a trade like this one, that where I have entered, as you can see, this is how BTC USDT isolated 14. This is the isolated leverage that I have used. This is the quantity, this is the value, entry price, mark price, and liquidated price. So this is where they will liquidate me. Once it reaches on this one, automatically they will liquidate me from this one. So this is the position margin, this is unlisted, and this is realisted. So this is everything how it is, how it looks like. So if at all you need to see everything, of course you can come here and see how everything is set. If at all you want to deposit your amount, you can come here and deposit. If you want to convert, of course, from BTC to any other coin that you selected, then you can come here, and once you convert, your money will be here. If you want to transfer from one account to another, so maybe from spot to derivatives, or you can change the amount where you select where you expect the amount to be, and you select this is the derivatives, then you select the amount that you want to select, then you confirm, your money will be here automatically. So that's all with the trading futures on Bybit. Bye for today. Good luck.